gentlemen, a warm applause to Walt Schagen, founder of Nex Labs, a crypto asset management platform offering an index building smart contract infrastructure. Walt brings neutral, game theoretic perspective to the crypto space with a focus on economic fundamentals and long-term system designs. His talk, Unlocking Crypto Potential from Disruptive Technology to Invisible Infrastructure, he will explore how crypto evolution into foundational infrastructure, drawing lessons from the internet growth and the nature of resilience. So he will discuss the next frontier in AI integration, decentralized innovation, and the quiet revolution of tokenization of real-world asset. This is quite incredible, quite interesting.
That's right.
So
yeah.
let's give an applause to Walt, guys. The stage is yours.
Thank you for your kind introduction. Yeah, so I was already very nicely introduced. I also represent Mood Global Services as a CTO, and we have a booth over there. If you want to visit me and have a brainstorm, I like to think about the future of crypto and you know, working with a lot of crypto companies, we try to build the latest and we deploy the latest technology. So that's my responsibility in part. Yeah, so first I wanted to discuss the reason for my presentation, which is recent events such as Robinhood launching their own Arbitrum layer 2 chain where they're going to tokenize stocks, and they have a regulation permission granted with MiFID and MiCAR in Europe. So there's a big market pool coming, big demand from retail. Then I also observed that there's asset standardization incoming, and yeah, finally we have had a bunch of asset tokenization adventures that I would like to discuss with you guys, such as maybe you remember Mirror Protocol or Synthetics, where cowboys essentially tokenized assets, or they made a contract for difference, and eventually users got scammed because the underlying asset wasn't actually purchased. But now we're moving towards a more regulated space, and I think the opportunity is massive because current real world asset tokenization is looking at about 20 billion in assets under management, and the total market is about 130 trillion. So that's less than 0.0%, so 0.01%. But I think it's finally happening. So we're almost at the last stage where sufficient regulatory requirements are met, and we can take that step. So instead of linear adoption, which if you read, for example, a consultancy report, they say the compounded annual growth rate is expected to be 30%. It can also be going from zero, nothing, like 20 billion is essentially nothing, to everything. And in order for me to prepare you guys, I'm holding this presentation because you guys are all innovators, creators, and I think this gap is rapidly closing. Like we see from TradFi industry, for example, brokers that are listing crypto assets, and from DeFi industry, we see, for example, Kraken listing stocks. So from both sides, the asset universe is being expanded, and at some point there is all the asset types are available within a provider, so you can buy any asset on any platform. Right. So for this presentation, I wanted to look a bit more outwards instead of like what blockchain technology can do, or where the technology, what is the latest technology, let's say AI. I wanted to look more at the existing market and what blockchain should be. What should blockchain be in order to become effectively the layer for the TradFi industry? Um, yeah, and then finally, I have some advice and a little brainstorm for you guys. Right, so one of the experiments that has recently been undertaken was led by mostly Chainlink, but also part of Swift was part. So this is a international payment network, and the idea was that companies submit messages such as their reports, like dividend filings, and the problem is that there's no global standard in uploading these messages. And what happens is that regulators need to approve these filings, so they convert it to a PDF. And when they convert it to a PDF, it's no longer editable, which is exactly the point, because then you cannot change it, and so it's secure in a sense. But then this group suggested to read that PDF with AI in order to get again the original data, essentially, to unwrap the wrapper, and yeah, essentially submit that in an approved way to get a sort of global messaging standard. The problem with that, in my opinion, is that why would you need to wrap a PDF and then unwrap it with AI? It adds like a potential layer of faults. AIs are not perfect. So although you could say, for example, with Gemini, the AI by Google, that they have a native PDF reader, so they collaborated with Adobe, and yeah, you could say it's faultless in that sense, but still you're converting different data and it's not efficient if you have a large amount of data. So what I would suggest is, for example, you take a corporate action, and together with it you create a hash, and if you approve this corporate action, then because you can see the hash, you know that the data is not altered when you open the original file. So you have a data layer and you have a verification layer, and all of these you send together, and that is, in my opinion, better than altering the original and then unwrapping it. But okay, this is just one experiment. And then what I already mentioned a little bit of um, the cowboys that we started with for equity tokenization, which is like, okay, synthetic stocks we had with Mirror Tracker and other protocols like synthetics, and often they didn't actually have the assets in custody. So this was like early days. Then later days came actual partial regulation, but not for retail, more for institutional players. They would be able to buy tokenized stocks with proper underlying assets. Only thing is, it wasn't really properly integrated with DeFi. So it's just a silo where they could buy and they have it tokenized, and not really sure what the purpose of it was, except for being fancy. But okay, it's progress, right? Uh, and then came like proper like DeFi integration, which is kind of the phase that we're looking at now, where we have, for example, protocols like BackFi, Dinari, and you can see partnerships with Kraken, where they actually through these protocols are allowed to offer stocks to retail. And yeah, this is almost like full compliance. Like it's still often listed on centralized exchanges, and not always fully integrated with DeFi, but it's coming. Yeah, right. And then the final one was Robinhood. I already mentioned a little bit. They started their own layer two. Um, well, they first launch on Avalanche, and maybe they want to start their own layer too, but details don't really matter. They can now officially in Europe with the regulatory approvals of the Lithuanian bank, they can tokenize stocks and offer it to European customers. So it's a big step and a big market they're untapping, because a bunch of these others RWA providers only had US compliance. Um, so yeah, this I think will also create a big market pool, and now regulators and yeah, other TradFi entities need to start responding, because this is gonna take share away from the TradFi banks, institutes, brokers. And the final problem with Robinhood is they still wanna, they wanna control all the transactions, because they batch transactions, and they kind of front run every user that trades on their platform, because they have their own exchange where the trades are routed. So you don't have a lot of annual costs as a small user. You don't pay an account fee, so to speak, but every transaction that you do make has too high slippage compared to the global market, I would say. So yeah, that's their business model. So yeah, I thought if we need to look at where blockchain could be going, one comparison we can draw is with the past, and the past is, in this example, internet. I thought there was quite a resemblance with the evolution of internet, because first there was the invention, then there was a huge hype. We got the dot-com bubble, and yeah, there was various reasons why this dot-com bubble burst. Like interest rates were rising, a whole bunch of crappy companies started an internet company. Nowadays, we can't even speak of an internet company anymore. Like, that's not a thing. You just start a company and it happens to use internet, right? So that's what infrastructure becoming invisible means, is that we just assume it's normal. And so I see similar things happening with blockchain technology, or distributed ledger technology, which is the overarching term that refers to not just blockchain, but also other cryptographic methods. Because later on I'll show that in the TradFi industry, we don't necessarily need blockchain per se, because that can be a bit slow. You can also use other methods. But yeah, we had like a bunch of good protocols in the beginning of the crypto boom, and of course we had a crash. And yeah, interesting protocols, for example, Ethereum, Uniswap, and Chainlink, they were early. So yeah, I would like to ask you guys to think what conclusions you could draw from this if you see these similarities. I'll give you a few seconds to think about it. These are some of the, if you recognize some of these pictures, I condole you. These are all scams, sort of. I was the proud investor of the bottom right one, which is a container that mines crypto, and it was very modularized. They raised 150 million and then never saw anything back. So that's like the hype. There was never any real product, although I believe they did make a single container just to make a video, and that's it. So yeah, what can we learn? That yeah, you shouldn't be investing in Ponzi schemes, but also it was actually, the speculation was based on real technology. It was actually founded by something good, but that made media take over, and then there was speculative hype all the new projects were cool, and then at some point when the bubble was bursting, everything was a scam. So that's how it goes. But one lesson you can take it as an investor is like, okay, maybe you should really look well in the fundamentals and be early, because that's the only way you can guarantee that you're dealing with businesses that are genuine, because they were already there before the hype. They didn't know there was going to be a hype. They just had a good idea. Uh, so that's one tip. And the other one is that you shouldn't be dealing in a industry with like low regulation, because let's say with the internet bubble, there was a bunch of companies that could just basically list their company for IPO. So on the actual stock market, with basically just a prop site and no real revenue. Well, then I thought, okay, we can look at the past to see where blockchain technology is going, but we can also look into nature. And one example that struck me as interesting was mycelium, so essentially fungus. And fungus, the way it grows, it explores every possible direction, and it keeps the strongest routes. So it finds the shortest way to food or whatever it needs. Like it's like a network of nodes, um, where it's the most efficient way without actually having a brain. And to me, that reminds me of blockchain technology, where everybody can set up a node globally, and it sort of self-optimizes into this structure. Um, yeah, so we started with blockchain technology with a bunch of what you could say weak routes, and that is opportunities people were taking, but that are actually remembered by the public now, that gives crypto a bad name. Let's say we have, for example, these NFTs that are just borderline ugly, uh, or you have a different opinion, that's fine, but it's like it was a huge boom and then the bubble burst. But you could say that is just exploring all the venues that are possible within the crypto space. And eventually only the strongest connections are gonna stay. So we started, for example, with proof of work in Bitcoin, of course. And then Ethereum went to proof of stake, which you could arguably say is an improvement, because, well, proof of work is very resource intensive in terms of energy consumption. Then proof of stake is in a different way intensive, because it's capital inefficient. So you could say it's improvement, but also not per se the end game. If we need to stake assets and then give rewards in the form of tokens that you own yourself, it's kind of like giving from the one hand to the other. The yield is not real, or effectively lower in that sense, compared to other people who are holding, for example, Ethereum, but are not staking. So yeah, you could say, what can we make that? Can we make that authorization system? Can we further improve that? That is the brainstorm I will have for you at the end. I have one suggestion for that. And yeah, the things that blockchain technology can do for the world, I think, is generally they have a positive impact, where you can start to take over small parts of institutions such as banks or governments, where we are slowly seeing, okay, we're replacing a currency, we're replacing borrowing and lending, we're replacing functions that a bank used to have, slowly by surely. And we're starting with the easiest ones, and we go slowly to the ones that require the most regulation and are most deeply embedded in our society. Let's say mortgages, or the things that actually are bound to a person, and more that are more debt-based rather than just asset-based. So yeah. Now, when you introduce, let's say, blockchain technology, you can introduce it to a a new government or a weak country, and it brings jobs and opportunities, but it also can slowly take over some of those roles. So it brings competition, and I think that's positive because that also makes governments, yeah, they need to do a better job essentially. They cannot just have, for example, a currency that's highly inflationary, because if you're highly inflationary, you're gonna be taken over by cryptocurrency. People are going to go on their phone and they're just gonna convert, and your own coin is not gonna be used. Right. So with the stock market, we can actually achieve also a couple of advantages allegedly if you would replace the stock market, the TradFi stack, with distributed ledger technology. Um, and you would probably think maybe it's like 24/7 trading possibilities should be really easy, right? Global accessibility due to the nodes. Uh, but that's actually not entirely true, because the stock market right now it's operating at about at peak rates 200,000 transactions per second. So a distributed network across the world would not be able to handle that, just because of the sheer distance between countries that you need to communicate with. So you get latency then. So what you want then is maybe a more centralized network like Europe, USA. What we have now in the TradFi industry, we have, for example, ICE, that is the mother company of the New York Stock Exchange. They are dominant in the USA, and in Europe, we're moving towards Euronext, taking over various local exchanges. So we had like a bunch of local exchanges in each country. Each country had their own stock market, and we're moving towards a European exchange, so to speak. But if you would replace that with distributed ledger technology, it's not necessarily that you instantly get 24/7 trading, because still you have regulatory requirements. And yeah, I mean, why wouldn't they already be able to do that right now without blockchain technology? That's just an advantage of blockchain technology, but they would probably implement this technology and then still have 24/5 trading. Yeah. And then one final advantage, I would say, of bringing blockchain technology to the TradFi stack is that you have smart contracts, which means composability, and it's accessible to anyone in theory, which means you can build complex products on top. And that will bring more trust, I believe, into the entire global equity ecosystem, because you can better align stakeholders with smart contracts. Those are essentially automations, so you don't have to trust anybody anymore. You don't have to trust settlement of, for example, cash or margin. It's all atomic. So this is an example of the traditional stock market, Euronext, and I took Amsterdam because I'm from Amsterdam. And I thought it was interesting because in the Netherlands, the stock market was first sort of invented. And this is the process that happens when right now you would make a order to buy a stock. So you first get an order, you send it to your broker. They send it to the optic engine on Euronext. They will match your order with counterparty. So you have your purchase essentially, and then it will be sent for clearing. And at that point, a sort of strange thing, but maybe you guys don't expect happens, is that there is a thing that's called novation, where the counterparty risk is taken over by institutions. And yeah, that costs them money. And it's also not atomic in the sense that now, instead of knowing what's going to happen in a DeFi transaction on chain, you have a settlement period, and eventually you write the records away in an encrypted manner. But this can all be squashed into a single process using DLT. This post-trade process that happens from step 3 towards the right, there's an industry in which globally about 3 million people work. So it's huge, and it can be replaced. So there's a lot of business opportunity in replacing it. I don't think that business opportunity is for us necessarily, but I think it's good if we realize that this is going to be replaced in the future, let's say 2030 or so, because there's projects going on that will be in the next slide. But if this stack is replaced, then I think it's sensible to try to understand what's going to happen next and where the opportunities lie for us. Couple problems with replacing this stack is that where the processing happens is in kind of like database fortresses, like the one you see on the right. And if you have a set of centralized nodes, even if it's blockchain technology, but because you need to have it relatively centralized, you kind of need like these kind of entities to work with. This is a level 3 data center. You cannot just simply enter. They have 2 diesel engines. They have various backup plans, and it's extremely secure. So I wouldn't say that crypto should, we should be complying with this kind of structure rather than that we say, oh, blockchain is going to take over. Then there's another problem that with this way the settlement methods work is that you first have the transfer of the asset or the equity, and then you have the transfer of the cash leg. And sometimes with institutions, it can be that they have a net negative balance. This is why you have this settlement period where they need to calculate, okay, what is your liquidity in the coming 30 days? And can you actually do this transaction still remaining to be liquid? So it's more complex than just an asset-based system or like a net positive system that we have in smart contracts, where it's always a positive sum that you're sharing. But I think it's solvable, but it's a hurdle. Let's keep it like that. Yeah, and then finally, it's already very hard for these institutions to go from T+2 to T+1 and the coordination that comes with that. But yeah, that's not the biggest problem in the world, in my opinion, because when we make atomic settlements, we kind of get rid of that in one go. It's just settlements after a few seconds, essentially. So yeah, there was an experiment by the ESMA, and they used 3 different banks, one German, one Italian, and one French bank, to try to replace part of this TradFi stack and, for example, get rid of this settlement period. It was successful. They're still running it, and they exchanged like a couple billion worth of transaction value, and it was all fine. But they got like level 2, so they didn't have to do complete file regulatory compliance. They were not allowed to file, for example, new listings like IPO. They weren't allowed to do emissions, but they could do transactions, and it was working. Yeah, and so they would be essentially, if you would compare them, they would become then a sort of Uniswap for the TradFi industry. That's what the DLT will be doing, organized then by banks being nodes. But the only problem is then, if you have a bank as a node, you have a bunch of banks. Like, how are you going to assign weight to each bank. There's small banks, there's big banks. That can be difficult, right? So yeah, my advice to all of you builders, creators is, okay, how can you ride this wave, this technology that we expect to start changing? Well, if you build composable smart contract infrastructure, so you have smart contracts that can actually be deployed on one chain, then on another, then you can just go from EVM to, let's say, a Robinhood. It's also EVM, right? You can go to Base. Finally, maybe you go to an ICE, which is the USA USA stack for TradFi, and Euronext is the European one, of course. So then you would be able to move on top of those distributed ledger technology stacks. Yeah. Another thing is, for example, AI and LLM. Instead of that you build a tool on ChatGPT, it could make sense to instead try to build an AI agent that is compliant with any model. So you need to understand the messaging system that is being used for AI agents to communicate with each other, and that you can always integrate with the latest AI agent or the one that is most relevant to your stack. Well, then I had a final idea, but I already mentioned a little bit about proof of work and then proof of stake, is that the stake is not really efficient capital being deployed. So let's say you have banks that are being nodes in a TradFi stack to verify transactions. Then maybe proof of bond would be a proper solution, where a bank's collateral needs to be stashed in such a place. They get effective yield, which is nice because now they don't need to deploy, for example, their capital with ECB in order, basically that capital is not really efficiently being deployed. And here it would be efficient, getting actual yield, and the size of the node would depend on the size of the bank. So it's actually relevant, a relevant metric to judge who gets to do what. Oh. Well, that was actually it.
All right, all right. Thank you very much, Walt. Really interesting.